GM. GM. So, daily levels. Let's take a look and update some of these charts. Today is Friday, and I want to get the Bitcoin chart up with the markings on it. Yeah, here we go. So, Bitcoin remains below the monthly open. In fact, I don't like that chart. This is my volume profile chart, the main one that I've been using. So, Bitcoin, daily chart, candle close, bearish. That is 3 bearish candles in this structure already. The 72k breakdown, the 67k breakdown, which closed below the swing low, and then after an attempt to rally on the Wednesday, a full retrace, closing lower. This is going lower, right? Now, how low? We don't know. You can see when price starts to grind lower like this, it tends to finish with a capitulation. I talked before about how Ethereum was particularly worrying in that Ethereum has a massive open interest buildup. So you can see over here. ETH has a big buildup of open interest, and yet price is still kind of grinding lower ominously. Since before the ETF news, it's still up 30%. There's still 2.6 billion of open interest added. And it doesn't mean that all that has to roll off, of course, with the Ethereum ETF coming. It might very well not go down there. This only applies if it breaks this level. But if it does, if Ethereum does break that level, there's a huge amount of OI built up that you could see a spike down. And it would only need to be that. It wouldn't need to be much more than just a wipeout for Ethereum. So, is that going to happen? Potentially. Bitcoin certainly is looking like that's a possibility. When you see these grind moves down, like just chopping lower, and it ends with a proper capitulation. It doesn't always, but after moving up to the highs and then falling off and grinding sideways, it does tend to. So, for me, Bitcoin below this level, below the dark shaded blue zone, and below the monthly open, Bitcoin is bearish. Quite simple for me. You can take off this support and daily market structure as well, because to me it's the monthly open that matters now. No monthly open reclaim, no bullish market. Now, purely from a perspective of psychology, I don't really like these setups that much, because when it looks so bad, and it's undeniable here, it looks like shit, that's often the worst place to actually be positioning yourself for a trade, because it could chop around here and squeeze. It could grind higher and higher and higher. It's not necessarily going to reward you right away. It could do that, and then fall over later. It could even rally all the way up, back to the 2021 all-time high, lower high, and down we go. Seen that before. So, regardless of whether it grinds sideways and chops and breaks down, moves up, squeezes really hard as people pile into shorts here, squeeze them all the way up, pumps them down. Where did we see that? Just a moment ago, just a few days ago, right? Big bearish breakdown. People get themselves too short, squeeze them all the way up. Oh, we're bullish again. Nope, all the way back down. So, never take anything for granted. That would also be a retest of the old point of control. That would be a retest of the 2021 all-time high. It would take out some stops from here. Would not be surprised to see a pump up there. And I would not consider a pump up there to be bullish unless it can break above 70. So, just be mindful of that. Look where Bitcoin is now. Understand that there's a high here and a low here, and it can go up, down, before it eventually falls over. That's even if it's going to fall over. It might not, right? I'll take you back to this move here. We declined, look bearish, pushed up, big collapse all the way down. Everyone's like, oh, choppy grind. Look at this. See the way it's grinding sideways here? It's just Slowly, slowly, slowly. That's what we're doing right now. And at this point, everyone's like, oh, it's going lower. It's going lower. What did it do? Never went lower. So it doesn't have to do anything. But when you're looking at this kind of phase, I want to really just press and hammer home the importance of trading to a plan, trading with patience, and understanding the way the market can move. Because there's a few of these type of moves back from last year. This one in particular, okay? Whenever BTC came down into here, I want you to look at that area. And I want you to compare that to this, okay? We had this move down. And we said, oh no, it's bad, it's bearish. Moves down, bad, it's bearish. Bounced up, went lower, failed to go lower, broke higher, came back, retest, pushed higher, eventually, slowly, eventually broke down. That was 24th of July to the 16th of August. That is 11th of June. That's like going to the 7th of July, right? All the way over here, right? 5th, 6th, 7th, basically 3.5 weeks. That's what this took, right? From the 24th to the 16th. Talking 3 weeks. We're only 3 days in. Imagine 3 days into a 3-week chop. That means there's 18 more days to come where you don't go lower, you don't go higher. You chop it up inside. Not saying that will happen either, but that's usually the path that wrecks the most people because nobody plays this well. Nobody positions themselves well for that. It's a low time frame traders. Scalpers, day traders who trade with low time frame, quick moves in and out, they'll probably do pretty well in that. But everybody else will just get themselves chopped up. Now, it might just collapse from here. Who knows? Again, nothing's guaranteed. So what do? You trade based on your price action principles. If you go back to this example and you look at it, you're looking for confirmation of a breakdown and then continuation, right? So what does that look like? You're looking for a break of structure or a MSB that leads to further weakness. That's important, leading to further weakness. There was an MSB over here, right? There was the swing low, price broke down, that was bearish. Did it lead to further weakness? No. Immediate bounce, sweeps it out, and holds. So instead of going down and continuing lower, it actually did the opposite. Then it sets a new swing low. And the very next time we came back, what did it do? Broke through it, weak, weak, weak. Right, so just weakness trending lower after the breakout. And boom, away it goes. And even if you just took both of these, if you took that as a bearish signal and got short, that's fine. Break down through the range, close near the lows, it'd be fine to go short there. You take one stop loss, maybe your stop is there, maybe your stop is there. Cool, you lose once, you win the second time. But you notice how in all of this structure, all of this chop, just using a 4-hour chart, you only had 2 signals. It broke once here, and then you redraw your structure level based on a candle close, and it broke once here. And that was it. So you didn't have to chop yourself up. If you're trying to catch the big short, right, the big liquidation candle, you said to wait. Now where are we at here? Let's do the same thing. So I've obviously got the volume profile on as well. I think the price is going to go lower. We have from this swing low, the lowest point over here, we had our structure break over here. That's where the 4-hour chart broke. Same thing. If you had a good short, got squeezed up, came back down. We have not, repeat, not had a break yet. We're waiting for the second break. A new swing low was formed because the previous one broke. And because of the bearish reaction, if price does come back here and break through that, I would expect, if it closes there, I would then expect, most likely, that leads to an unwind to the 62, 63 area. But it hasn't yet. The level to watch for me is 66,220. That would be the 4-hour swing level breaking. If candle close down to 62. If that doesn't happen, no trigger. I'll take you back once again, right? No matter how bad it looks, remember this level, we rallied up, we came back. Oh, it looked bad there. It looked bad here. It looked bad even there. None of them broke and closed below the dotted line. No trigger. What did price do? Pushed all the way through. What did I just say to you a minute ago? What could happen? What could happen would be what? We don't break there yet. Maybe we sweep below it, we hold. And what does it do? It rallies up to, I need to make this a little bit cleaner. It rallies up to the 2021 all-time high. If this level holds, you can easily see it move up before eventually coming down, even if it is going to go down. Just like in this range, when it hangs around at the lows and looks bad, but it fails to break, it pushes through. Took some stops to the side, and then it was ready. So wait for confirmation based on whatever your systems are. It's absolutely fine, by the way, to be building positions here if you have that as one of your trade setups, right? Me, for example, I do look at the loss of this value area as a clear reason to short. So this area here, the dark blue shaded zone, we've lost that. Price was trading inside of that for weeks and weeks and weeks. We lost it, briefly tried to reclaim it, lost it again. So I do think the red path shouldn't happen based on the volume side of things. It actually should just go no higher than the monthly open. But if you want to see a place for your stop, it's probably there. Should not go there, should not even reclaim the blue zone, and actually should just trend down to 62. That's where it should go. Now, of course, if it tries to break lower and reverses, you'll probably see the red path. But keep it simple. BTC is bearish from the volume perspective, volume profile. And it needs one more confirmation here, where I've set the alert. Breaking a swing low below there, almost certainly goes right the way down to 62 or 63. Maybe all at once, maybe it's a collapse candle, or maybe it just is a slow, choppy grind, but I do expect that it would get there if that were to happen. Now that's the chart, okay? Where does the chart become bullish again? Let's zoom out. We've had multiple bearish confirmations on the daily, mostly based around the candle closes, as you can see here. Candle closes, several bearish closes below that swing level. Now, it's not like it's crazy panic stations yet. You look at Bitcoin, it's still at 67. That's fine, right? Dropping back down would just be good bullish consolidation. If it holds 62, that'd be fine. Fill in the gap, bounce and come back. But where does it actually get bullish again? For me, it's very simple. It has to have a daily close above 70. That's it for me. You might say, why not 72? I would say yes, obviously 72 is like your double confirmation. 72 is where you're no doubt bullish. But everything we've seen this week, from the Monday failed rally, to the Tuesday heavy sell-off, to Wednesday FOMC and inflation data, which couldn't get us above, all of this, some of it good news, by the way, like inflation. So all the good news and the bad news has meant we cannot get above 70 at this stage. If we turn around and get above 70 in a relatively short space of time, like say in the next week, I would consider this to be a completed trap. It should not be back above 70 so soon, and I think that would be a big bullish sign for the market. There's loads of bullish stuff going on in the market. And I said this yesterday in trading analysis. I want to revisit it. So, price action very reminiscent of last summer, where we get lots of good news. So in last summer, Ripple had a favorable judgment against the SEC, and Grayscale did too. This was the Ripple news here, that candle, 13th of July. That was when Ripple had the news, everything pumped. Obviously, Ripple went up super hard. Lots of alts went up, and it was the absolute top of everything. Pico top. Led to bleed, eventual collapse. But that was good news. Why did the good news not make us all moon? It wasn't time. Price needed more time to consolidate. Then, here, this pump was Grayscale winning against the SEC. This is what led to the ETFs being approved. Gensler himself said it. If it wasn't for that court ruling, he would not have approved the ETFs. So that's a fucking massive big news. And yet, it retraced 2 days later. Reason being, the market was not ready. You have to understand positions need to be built. If there is, and this is testing. Price tried to go higher. It tested it. It pushed up. It fairly tried to test. People were saying, okay, buy and sell up here? Nope. Not enough buying pressure. Too much selling pressure. Back down it goes. It's supply and demand. There was an imbalance. It was not ready to move. It came back to balance. Where it chop, and eventually the bulls started to build up the energy, and away we go. So, I didn't mean to refresh that. Twat. So, zoom out, back to the present day. So, when I mentioned in trading analysis, the market needs more time to digest all the news and range more before a proper breakout attempt can happen. That's all it is. And this kind of stuff here, where people start to get themselves way too zoomed in, talking about fucking macro shit, all the nonsense. Oh, it's bad, it's this, it's that, it's Fed, it's Jerome Powell, it's Janet Yellen, it's fucking liquidity, inflation, jobs. These are all the same people who are telling you about their favorite fucking meme coin 6 weeks ago. And the same people who are screaming about NFTs in 2021. Leave macro to the macro guys, right? And what I mean is, I don't mean ignore macro, absolutely don't. What I mean is, if you see someone on Twitter or on YouTube or whatever who constantly posts about macro, they post about the Fed, they post about interest rates, they post about inflation, they post about monetary policy, they post about the stock market, the bond market, oil. Good. That's their game, right? But you should be tracking people who have big followings and they talk about whatever is current. These are your sentiment indicator. So, whenever there's someone and they're posting chart setups of DEX screener shitcoins 2 months ago, and now they're talking about the Fed and monetary policy, understand they are a really good sentiment gauge. That's the kind of stuff you see near the bottom, and I see it. My whole feed has given up on meme coins and DEX screener and isn't talking about pump this, pump that. The whole feed's talking about what's happening with the Fed, inflation, blah, blah, blah. Very good. Doesn't mean the bottom is right here, but it's a good sign. And to hammer this point home, this also was happening over here, okay? Everybody became a meme coin expert again at this point. Whenever we broke out or attempted to break out and the Ripple news came and then it fell back, for a couple of weeks here, we had an on-chain summer. We had Rollbit and Unibot. It was just after Pepe had blown up in April and May. There was a bunch of meme coin stuff happening. But then it got bad. It got bad on this move here. And in July going into August, for these 3 or 4 weeks, everyone was talking about macro. What's happening with inflation? What are the Fed going to do? What's happening with money? Global liquidity? Is it bad? Is it good? Blah, blah, blah. Right? And everyone was talking about it over there. And so it doesn't mean it's the bottom because we still ended up collapsing more. But it's an early gauge sentiment signal. And understand as well that people become more experienced in the markets, right? So the more time you spend trading, the more things you find out about. And once you start hearing about the Fed and you see how much the price moves whenever there's inflation numbers, of course, naturally you're going to look at it. So that's where we're at. Nothing's going to happen today, almost certainly. bit of up movement, bit of down movement, sure. If there is a breakdown, I don't see it really going much below 65. If there is a move up, I don't see it going much above 68. I think that barring some kind of catalyst, today is probably going to be a choppy day, because yesterday we had a big move and Wednesday we had a big move. So on Wednesday we had a massive move up and down. Yesterday we had a big move down, relatively obviously. It's not an enormous move. Today everyone's, this is it, big collapse, big pump. Fucking nothing. Probably nothing today. Doesn't mean take your eyes off it. If there's setups, take the setups. Probably nothing today. Probably nothing on the weekend, because weekends get quiet. And then next week we likely move towards some directional move. And that's it. Check the ETF flows, as we do. That's a good habit. Part of my process. Big outflows yesterday, 226. Nothing surprising. Love to see this, because I think that people just have this completely wrong. First of all, the net total inflows is up. A few weeks ago this was 12 billion, it's now 15. That's massive. 3 billion has flown in since May, by the way. Since March, sorry. So, 3 billion extra has flowed into the ETFs, even as price has been consolidating. Assuming that that's accumulation, which it must be, then looks good. ETFs keep buying, as long as we can push beyond that. In the shorter term, anytime there's these outflows, people get panic. Oh my God, no, it's bad, this is it, fucking it's all over, they're dumping on you. No. It's gone from 12 billion to 15 billion in the last 3 months. The outflows are just the same as the fucking inflows. Can't have inflows every day, some days you have outflows. But when you have outflows and price looks a bit weak, people just get themselves all caught up in their bearish ideas. So I love to see this all happening at 66, 67. Let's see how it goes. If it drops down towards the lows, you'll probably see people getting even more bearish, which might set up some better ideas, better trades. Full focus though. I think we are weeks at most away from a massive pump. And you want to be well positioned for that. So don't allow yourself to get caught up in all the bearish propaganda. It is bearish on low time frames. That does not mean that the next 6 months is bearish. Almost certainly, the next 6 months provides much higher prices for Bitcoin and ETH especially. And of course, if that happens, also go up too. So stay locked in.